Welcome to the first tax law module, Determining Dependency. The purpose of this module is to learn what dependency is, review the different types of dependence, find out why it's important, and conclude with real-world practice questions to determine a taxpayer's dependence. So why does dependency matter? Dependency is an important consideration for determining if someone qualifies to file as head of household or, less commonly, as a qualifying surviving spouse. Dependency is important for establishing whether a client will qualify for different types of tax benefits such as the child tax credit, the credit for other dependents, dependent care credit, and the earned income credit. There are two types of dependents, a qualifying child and a qualifying relative. Having a qualifying child on your tax return is generally more beneficial than having a qualifying relative due to credits such as the child tax credit and the earned income credit, but not everyone qualifies. If the taxpayer is someone else's dependent, they cannot claim themselves and they can't claim any dependents of their own. A taxpayer claimed as a dependent on another return may still file a tax return of their own to receive a refund from withholdings, or in some cases, they might have a balance due. For assistance in determining dependency, see your publication 4012 under tab C. Let's start with the rules that apply to both the qualifying child and the qualifying relative. There are three tests that must be met for all dependents. They are the dependent eligibility test, the joint return test, and the citizenship/resident test. The dependent eligibility test states that a taxpayer who can be claimed as a dependent by someone else cannot claim anyone as a dependent on his or her own tax return. The marital status or joint return test states that a married person who files a joint return cannot be claimed as a dependent on their own tax return or their spouse's tax return. The exception to this test is if the joint return is filed strictly to claim a refund and there would be no tax liability for either spouse on separate returns. This is a rare situation. See your site manager or an experienced preparer for assistance. The citizenship resident test states that a person being claimed as a dependent must be a U.S. citizen, a U.S. resident alien, a U.S. national, or a resident of Canada or Mexico to qualify. There are four tests that must be met to claim a dependent as a qualifying child: relationship, residency, age, and support. The relationship test. To qualify, a child must be the taxpayer's son, daughter, stepchild, foster child, adopted child, or a descendant of any of them. This includes a grandchild or the taxpayer's sibling, including half-siblings, step-siblings, or a descendant of any of them, like a niece or nephew. The residency test. The child must have lived with the taxpayer for more than half the year. Also, the child is considered to have lived with the taxpayer during periods when either the child or the taxpayer is temporarily absent due to illness, education, business, vacation, or military service. The age test. To qualify, the child must be under the age of 19 by the end of the tax year and younger than the taxpayer, or a full-time student under the age of 24 at the end of the tax year and younger than the taxpayer, or they can be any age if they are permanently and totally disabled. Finally, the support test. To qualify, the child cannot provide more than half of their own support during a tax year. If there are two taxpayers that have the same qualifying child, only one taxpayer can claim the benefits for that particular qualifying child. If these taxpayers who could each claim the qualifying child cannot agree on who will claim the child, you would need to apply the tiebreaker rules in publication 4012 under tab C. If a person does not meet the requirements to be a qualifying child, they might be a qualifying relative. There are four tests that must be met to claim a dependent as a qualifying relative. Not a qualifying child, member of a household or relationship, gross income, and support. Not a qualifying child. A child isn't your qualifying relative if that child can be your qualifying child or the qualifying child of another taxpayer. Member of a household or relationship. To qualify, a person must either live with you all year round as a member of your household or be related to you in one of the ways listed under relatives who do not have to live with you. Gross income. To qualify, a person's gross income for the entire year must be less than the threshold set by the IRS. This figure is in your publication 4012 and is adjusted each year due to inflation. Then finally, the support test. To qualify, you must provide more than half of the person's total support during the entire tax year. Notice the distinction here between the support test for the qualifying child and the support test for the qualifying relative. For the qualifying child, the child cannot have provided more than half of their own support by the person claiming that child. Usually the custodial parent may or may not be the person who provides most of their financial support. However, for a qualifying relative, the taxpayer must provide more than half of the relative's financial support to claim them as a dependent. Now, let's practice determining dependency. We will refer to tab C in publication 4012 to determine dependency. You'll always begin with table 1, all dependents. Megan and her daughter Francesca, age 8, lived in the same household for more than half the year. Megan pays for all of Francesca's expenses. They are both U.S. citizens. Let's start with step 1. Can you be claimed as a dependent on someone else's tax return? Megan supports her own household financially, so she's not going to be claimed as a dependent by anyone else. So the answer is no. We move on to step 2. Was the person married as of December 31st of the tax year? Francesca is not married. She's 8 years old, so we move on to step 4. Was the person a U.S. citizen? The answer is yes. So we move on to step 5. Was the person your son, daughter, or one of those other relationships that are listed there? We know that Francesca is Megan's daughter, so the answer is yes. So now we can move on to step 6. Was the person under the age of 19 at the end of the year and younger than you, or a full-time student under the age of 24? We know that Francesca is 8 years old, so the answer is yes. So now we can move on to step 7. Did the person live with you as a member of your household, except for temporary absences for more than half the year? Francesca did live with Megan for the entire year, so the answer is yes. And we can move on to step 8. Did the person provide more than half of his or her own support for the year? Megan paid all the expenses, so the answer there is no. Francesca did not provide more than half of her own support. Next, we move on to step 9. Is the person a qualifying child of any other person? Let's assume that's not the case here, so we can select no. So Megan can claim Francesca as her qualifying child. We will practice more scenarios during training. This wraps up this module on determining dependency. Let's review what we've learned. Dependents impact the entire tax return, especially filing status and credit eligibility. There are 2 types of dependents, the qualifying child and the qualifying relative. You will always use the charts in the publication 4012 tab C to determine if someone is a qualifying child or relative. In our second tax law module in this series, we will cover filing status. Be sure to watch each module in order initially to firm up on your understanding of the flow of information. Afterwards, you can return to individual modules as needed to refresh your skills.